Hello and welcome to another video on my YouTube channel. My name is Joris and today I am here with the 7th part of my edition of 2025 series about European ETFs that invest towards European companies, and this time I'm going to talk about factor ETFs. So in this video I'm going to discuss 4 factor ETFs, and you know the rules by now. It's already the 7th video in this series, so in total I'm discussing 41 ETFs. After this video you will have already heard 38 of them, and they invest into European companies. They are also based in Europe, so they are UCITS ETFs. They distribute a dividend, of course, in this channel, and they are not swap or synthetically replicated. After this series, if you know of any other European-based ETF that I missed with these metrics, then please comment the ticker or the ISIN code down below in the comment section. And I promise you, next year when I revisit this series, the ETF that you mentioned will be included in the series as well. The first two videos, yeah, I went over this already a lot of times now. So it was about the MSCI Europe index and the Euro STOXX 50 index mainly. And then I started with a series about 6 other videos that try to group the diverse indexes that all the other ETFs have going on. And in this video, it means that I'm talking about multi-factor ETFs. In this case, factor investing focuses on 1 or 2 factors like the following. So you have value, selection of undervalued companies. Quality aims to select companies with good fundamentals, earnings, profits and stuff. Then you have the volatility, that select companies with a low beta or, in the contrary, even a high beta. So you have both types. And then you have momentum ETFs, and they try to select companies that show to be in upward trend. So they want to pick up the upward trend really fast, pick up those shares and ride a wave. But of course, it's also a bit like a self-fulfilling prophecy, that one, because when they think it's going up and they start buying that company, it's definitely going up further. And then from the moment that it stops going up and they sell, they always sell at the right time, especially because when they have a lot of money, they influence the direction of the value of the stock a little bit. So it's more or less a self-fulfilling prophecy, but sometimes they are really hitting it on the button. Especially value ETFs, they can really have it right, and then they really outperform all the other ETFs. Multi-factor ETFs try to combine multiple factors of them, and we don't have really a lot of multi-factor ETFs going on the European stock market. So I'm only going to discuss 4 ETFs in this video, and I know this is a simplification, so for details always check the prospectus of the ETFs. You can find that on the site of the ETF provider. Sometimes there are links on just ETF or on extra ETF as well towards the prospectus of the ETFs. Definitely read those. I always do that myself as well, because you need to know the philosophy behind the investment strategy of the index where the ETF invests towards. Really important. So for ETFs, I have the IFSD, that's on the London Stock Exchange. I have the EPVLD, and those are multi-factor ETFs. And then I have value factor ETFs, and that is the IEDL on the London Stock Exchange once again, and the EMVEUA on the SIX Stock Exchange. Everything is in euro. The EPVLD is also available in Swiss francs on the SIX stock exchange. Just keep that in the back of your head. So first off, we go to EFSD, and as you see, the former name of this ETF was iShares Edge MSCI Europe Multifactor UCITS ETF, and now it has changed its name to STOXX Europe Equity Multifactor UCITS ETF. So it changed from MSCI Europe Index, Edge MSCI Europe Index, to the STOXX Europe Equity Multifactor Index. And I believe that is why they could lower their total expense ratio from 0.45 to 0.25%. That's a big jump for BlackRock, and I really like their move because 0.45% was really expensive. And yeah, with a total expense ratio of 0.25%, they really are hitting it on the head here. So you can buy one share on the London Stock Exchange for 7.17 euros. There are 164 holdings into this ETF, and there is 124 million invested into this sampling ETF. The past year it is up 9.69%, the past 3 years it is up 49.34%, and in the past 5 years it is up 79.42%. And I always compare these ETFs towards the MSCI Europe Index ETFs that I discussed in the first video, and in this case the performances are always higher than for the performances of the MSCI Europe Index ETFs. So that's quite nice of this ETF here, that it beats the MSCI Europe Index. Pays out 2 dividends per year in June and in December, and the dividend yield is 3.06%. And these were the last 2 dividend payments that it made, so in December last year and in June of this year. Then we can go to the EPVLD of UBS, total expense ratio of 0.25%. So you have the factor MSCI EMU Prime Value ESG UCITS ETF. So ESG, this means that you will see this video, this ETF back in the next video as well, because then I'm discussing all the ETFs that invest towards ESG rated indexes. And the currency on the SIX is euro or Swiss francs, so you have 21.56 euros for one share on the SIX, or 20.08 Swiss francs on the SIX for one share. There are 60 holdings into this ETF, and there are 72 million invested towards this fully replicated type. The past year it is up 10.60%, the past 3 years it is up 47.49%, and in the past 5 years it is up 72.49%. So for a 5-year period it is more or less the same as the MSCI Europe Index ETFs, but for the past year and the past 3 years it is slightly overperforming the MSCI Europe Index ETFs. Pays out 2 dividends per year, once again February and August for UBS ETFs, and the dividend yield is 2.86%. These are the last 2 dividend payments that this ETF made. And then we can go over to the factor value ETFs. So the iShares Edge MSCI Europe Value Factor UCITS ETF with a total expense ratio of 0.25%, the IEDL. You can buy one share for 6.61 euros on the London Stock Exchange. There are 147 holdings into this ETF, and there is 54 million invested towards this sampling ETF. Past year it is up 18.37%, the past 3 years it is up 54.94%, and the past 5 years it is up 101.57%. This is the highest performance of all the ETFs that I'm mentioning in this series, so that's quite nice. Pays out 2 dividends per year, in June and December, just like the first one that I discussed in this video from iShares, and the dividend yield is 3.83%. So in June and in December, they paid out these dividend payments in the past year. And then the last one, it's the EMVEUA from UBS, the MSCI EMU Value UCITS ETF with a total expense ratio of 0.25%. You can buy one share on the SIX stock exchange for 53.18 euros. There are 147 holdings into this ETF. It has 214 million euro invested into this ETF, fully replicated type, and in the past year it is up 21.94%, so a really nice performance here as well. The past 3 years it is actually performing the same as the MSCI Europe indexes in the past 5 years, so that's also quite nice. And in the past 5 years it is up 101.45%. So here the value ETFs are really bringing it home in the past 5 years, and I believe that's not abnormal because 5 years ago you had a crisis going on, the COVID crisis, so everything came crashing down. And then when they started investing according to value principles, you could really make some deals on the stock market, and that's exactly what they did. 2 dividend payments per year, UBS ETF of course, so February and August. So here you can see the payments, and in total this dividend yield was 3.60%. And this is the overview of those 4 ETFs that I discussed in this video. So IFSD and EPVLD, they are slightly overperforming the MSCI Europe ETFs. And then you have IEDL and EMVEUA that are really outperforming almost all the other ETFs, especially over the 5-year period. So it's a pity that they only pay out 2 dividends per year, but yeah, for iShares, I don't understand why they only have 2 dividends per year. For the UBS ETFs, I totally get it because yeah, it's just one of those things that UBS does. They hardly have ETFs that pay out more than 2 dividends per year. They do have them, but they are rare. Let's put it like that. And then it's also clear why iShares decided to lower the total expense ratio of their fund here from 0.45 to 0.25 as a total expense ratio, and why they perhaps also changed the index provider for this fund. So now they are truly equal to the other 3 multi-factor ETFs on the European stock markets. And with that being said, thank you for watching to this video. Please hit that subscribe button if you like this kind of content. Hit that like button as well, because that helps out the channel enormously. Thank you for watching, and see you on the next one on my YouTube channel. Bye!